is Jim Jubak, and welcome to this week's Trend of the Week video. This week's trend is, are we looking at a supply crisis for Treasuries? The federal deficit, Treasury said, grew by what, even to this jaded observer, is a large amount, a 1.39 trillion increase in the first 9 months of fiscal 2023. That's up 170% from the first 9 months of 2022. And Treasury recently increased its forecast for borrowing in the July to September quarter to another 1 trillion. That's up from the 733 billion that they forecast back in May. This is an extraordinarily fast increase in the supply of Treasuries. It's been made even tougher on the market because, remember, the Fed is trying to shrink its balance sheet, which means they're trying to not buy as many Treasuries, which means that more Treasury supply is hitting the private market and being forced into the hands of private holders. In recent auctions, we've seen a demand by these private buyers for a bigger discount. The problem is not hitting across the board. Right now, what we're seeing is that because of the debt ceiling kerfluffle, Treasury has been issuing a lot of short bills to rebuild its buffer. They are gradually trying to decrease the percentage of 3, 6, 1-year bills and move to longer maturities. But the market is not really all that happy with buying longer maturities. So the recent auctions on the 7 to 20-year Treasuries have been pretty weak, with a lot of demand for bigger discounts. I think that's going to continue. What this means for you is that if you're looking to buy, because your own financial planning says this is where you should be owning stuff, if you're looking to buy 10-year Treasuries, for example, you might look for there to be some kind of an extra yield premium because of this current situation. Remember, however, that the reason the market doesn't really want to buy the 7 to 20-year Treasuries is because the market is convinced that inflation is going to be here for a while and higher interest rates, perhaps forever. But anyway, if that issue aside, if you can get, because of this current supply-demand mismatch and because of trouble in the long end of the yield curve for Treasuries, if you can get a 10-year Treasury paying 5% or so, I would go ahead and buy it even with those caveats about future inflation and future interest rates. So if you like this video, please give it a thumbs up. Subscribe to my YouTube channel. That way you get notification when we do our next one. We're doing about 3 a week, but not always on the same day. Subscribing to my YouTube channel is free, and so is signing up for my JubakPicks.com site with 3 portfolios in it, including a dividend portfolio. You can also subscribe to my paid site, that's JubakAM.com, and it's got 6 portfolios, including some options and ETFs, and you can find links to all those down below. Thanks for watching.